Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SOFI stock. In this video, we will be analyzing two articles, to where the first one is titled, Bank of America Lowers SoFi Technologies Price Target to $10. We'll be going over if this news will negatively impact their overall share price, and what other institutions and analysts believe will happen with SoFi Technologies' share price over the long term. After that, we'll move on and talk about another article titled 3 Strikes and You're Out for SoFi Stock. And this is not as bearish as it seems, but we are going to be reviewing this article to not only talk about their upcoming catalysts and how the road could be very bumpy over the next few months, but we're also going to talk about their long-term growth trajectory, and we are going to go over why Bank of America has lowered their overall share price target compared to other banks and institutions which have actually higher their overall share price targets for SoFi stock. So if you want more videos on SoFi Technologies, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. SoFi Technologies is a fintech company or a financial technology company that essentially operates as a digital bank, and their recent price target has been reduced by Bank of America from $11.50 down to just $10. Now, the good thing about this is that $10 is still higher than their current share price, which is rather positive. Right now, they're trading at around $7.92, so $10 is still an increase from their current share price, making it a good buying opportunity. Now, besides Bank of America, we also know that a plethora of other financial institutions throughout the recent months have chimed in and given their share price targets and price predictions for this company. So Bank of America and their analysts are not the only research professionals that are currently weighing in on SoFi Technologies. For instance, Citigroup lifted their price target for SoFi stock from $10 up to $12, and they gave it a buy rating, which is rather positive. And this rating came in back on August 17th, and there have been no new changes since then. That means that Citigroup is much more bullish and positive on the future of SoFi Technologies than Bank of America is, because Bank of America lowered their price target down to $10, while Citigroup increased their price target from $10 up to $12, which is a very good sign. On the other hand, we also see that Oppenheimer downgraded SoFi shares from an outperform rating to a market perform rating on a research note back on June 15th, while Mizuho lifted their price target on SoFi stock from $9 up to $15, clearly giving this company a buy rating. So again, we have a $10 price target, a $12 price target, and a $15 price target, with a few market perform ratings and a few buy ratings on this company. We also know that Morgan Stanley chimed in on this company, and they also lifted their price target from $6.50 up to $7, and that happened back on July 13th. And then finally, we have Compass Point, which assumed coverage on SoFi Technologies back on June 22nd, and they issued a sell rating and a $5 price target, which is one of the only sell ratings that SoFi Technologies has. So overall, I would say we have some bearish negative price targets of $5 and $7, and then we have some more bullish price targets of $10, $12, and even $15. In the end, we still see that the majority of analysts and financial institutions see long-term growth in this company's future, and that's exactly what I want to capitalize on as a SoFi stock investor. SoFi also has a few upcoming catalysts, which we have talked about before, such as them becoming a fully blown profitable company at the end of the year, as well as them having an upcoming earnings report on October 30th, which should be rather positive. So I'm very excited to see how they are going to perform then. But that's not all. We also have some other news, and we're going to dig deeper into why some of these institutions have issued the price targets that they have given for this stock. SoFi stock currently trades for around $7.92, and the last time I looked it was $7.90. However, like we said earlier, analysts, professionals, and experts are very divided on this stock. Some believe the company could fall as low as $3 over the next 12 months, while others believe it could surge up to $16 over the next year. For me personally, I think SoFi Technologies is easily worth around $10 or more, meaning that right now could be a good time to acquire SoFi shares if you are not already overexposed. If you're familiar with me and my work and my risk management policies, I don't advocate for more than a 5% initial portfolio allocation into any singular risky growth company, which would include SoFi stock. Meaning that if your portfolio is around $100,000, I would not advocate for you to invest more than $5,000 into SoFi Technologies. And feel free to spread that $5,000 over a long period so you can dollar cost average into the company, which should lower your average cost basis if you did this periodically. But nonetheless, overall, if you are a long-term investor, this should be an extremely good growth company to hold in your portfolio over the long term. That's why, like many analysts who are very bullish and positive on this stock and they've bought some shares, I also have bought shares because I personally am still bullish on this company and their long-term growth trajectory when we look at their growth over the next 5 to 10 years. Currently, their revenue CAGR is absolutely phenomenal, and I think there is a long-term growth trajectory ahead of this company, specifically in regards to short-term catalysts, such as them achieving profitability and their upcoming earnings report, which will give us more insights on this company's future projections regarding their finances. However, the author cites 3 problems, and he says that the first problem is that SoFi stock isn't a tech stock. It's a finance stock that uses technology to make loans and generate deposits, and it doesn't have offices, yet it's still a bank. For me, there is no problem here. Clearly, it seems that the younger generation is gravitating away from going into brick and mortar banks, and since they can do the majority of their banking from apps on their smartphones or even on the computer, there is no need to have offices or actual brick and mortar stores, so I completely disagree with the author on that regard. Now, I do understand that he wants to value SoFi as a finance stock instead of a technology stock, but since they are a hybrid between both of these, and that's why they are a fintech company, which literally stands for financial technology company, they are both, which means they should be valued at an average between both of these. The next thing that he highlights is that SoFi was born as a fintech company back when fintechs were very popular and when companies like Affirm, ticker symbol AFRM, was all the rage and was surging in their overall share price. But since then, the author says that the hype and the excitement around fintechs has since decreased. However, I do like how the author highlights that SoFi Technologies has a huge advantage over other fintech companies, considering that it could resell its software to other banks and institutions as a service. This is thanks to their Technisys platform as well as their Galileo AIPs. So through this software, it's not only going to make SoFi Technologies money, but it's also going to save them on various costs, because that way SoFi doesn't have to outsource this type of service. They are literally the originator of this service, which other banking institutions use. And this is going to be good for both aggressive and conservative bankers, and this is going to solidify SoFi Technologies' overall stability and resiliency in the general stock market, because other banks and financial institutions as well as fintech companies rely on SoFi Technologies. So it's very probable that some of these other fintech companies could go out of business, but it's not necessarily probable that SoFi Technologies themselves will go out of business, and that's what I really like about SoFi stock. Now, considering these pros and cons, why did Bank of America finally bite the bullet and downgrade SoFi shares? Well, the main reason that they did this is due to their overall valuation as well as the macroeconomic economy and how it's going to affect fintechs. For instance, fintechs are currently on their way out in terms of popularity because all of SoFi's peers are down. For instance, if we look at Robinhood, Upstart Holdings, Affirm, LendingTree, and other companies like that, their share prices are all relatively down, and since SoFi's peers are down, this is also going to move SoFi down along with them. Some other fintechs that are doing quite good right now would be companies like payment processors like Visa or even ticker symbol FISV. And we can see companies like Visa, American Express, MasterCard, Block, and even PayPal, and many others doing quite well over the long term, while fintechs are going to be extremely volatile. Most of these other companies that I previously mentioned are smaller companies which don't have large market caps when compared to companies like Visa. That's why these stocks are going to be way more volatile in the short term, and you should definitely do your own research to determine which of these companies you personally like and will fit into your overall portfolio. The author re-emphasizes that these types of fintech companies are on their way out, and platforms that these various companies have are not innovative enough, which actually I would disagree with him on that. I don't think he has enough evidence, and he doesn't present any evidence that these types of companies are on their way out right now. For me, I think financial technology companies are the future, and that older legacy legacy banks, as well as brick and mortar banks, are on their way out. So I would completely disagree with the author in this regard. Now, he does correctly highlight that Galileo and Technisys, which are the platforms that we referenced earlier, are not the profit drivers that SoFi thought they would be. However, I would like to add that SoFi Technologies said eventually that these will end up creating profit and cost savings, and they've already done the cost savings portion of their overall promise. They are just waiting for this segment of SoFi to turn profitable, and it doesn't really matter because the general company is going to be profitable by the end of the year according to the most recent estimates, projections, and statistics. So the future forecast of this company is very strong, and I anticipate them surging over $10 before the end of the year once they become profitable. We are also going to get a lot of good news once they release their earnings report around October 30th, and this is going to give us new financial insights. Lastly, the author correctly points out that investors are very scared right now regarding the macroeconomic economy because there's so many articles saying that we're going to go into a recession or that interest rates are too high and inflation's out of control and the stock market is going to crash, but all of this is just fear, uncertainty, and doubt to get clicks for you to read their articles. Once you dig into the evidence and the data surrounding their claims, they don't have a lot to go off of, which is why currently I think that the future looks rather bright instead of bearish and negative. This is why some investors are selling small cap companies such as SoFi Technologies, which only has around $25 billion worth of assets at the end of June, and investing into much larger banks such as Bank of America. But to me, since we've seen the collapse of Silicon Valley Bank back in March and we saw other banks also collapse due to bank runs and other reasons, SoFi Technologies was actually so resilient that they gained deposits and assets and customers during that time, even while much larger banks were failing. So again, I don't follow his logic here. SoFi is very fundamentally solid. They survived the banking crisis, and I don't think investors are doing a wise thing by selling these smaller regional banks right now. I do understand that the financial institutions are receiving a lot of heat due to higher interest rates, but over the long term, I can anticipate that these interest rates eventually will start to taper off and go down, which will benefit banks over the long term. So why not scoop up some shares of some of these financial institutions such as SoFi Technologies while they are cheap, so then you can make major profits going forward. In conclusion, the author says that SoFi has 3 strikes against it, and 2 of them I disagree with him on and 1 I agree with him on. However, regardless, I do like how he ends the article. He says that he believes that SoFi Technologies is a good long-term investment if you decide to invest into SoFi's SOFI stock for the long term, meaning the next 5 to 10 years. They have very innovative ways of collecting deposits and making loans and other types of transactions at the lowest possible costs for their customers, which makes this company extremely attractive. They also have a very strong customer base. They are adding members left and right, and the future of this company does look very bright considering that they are stealing away market share from much larger institutions. So while I have been buying SoFi and I've not sold any, the author of this article hasn't sold any either, but it's understandable if you do during the short term because some investors believe that the economy and the stock market are going to be quite volatile, and I do agree, the stock market is going to be quite volatile over the next few months, but considering that SoFi does have very positive upcoming catalysts, it should reflect very well on their overall share price, which should go up above $10, and then from there, once they achieve profitability and we enter into 2024, the sky is truly the limit for this company. So with that being said, I would love to hear your thoughts down below about SoFi Technologies and their SOFI share price. Don't forget to go and annihilate that like button right now. Comment your thoughts down below. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents to support me personally for more videos like this one. And with that being said, I will see you in the next YT video.